very quickly going to look at control accounts, benefits, and why errors might not be found. Okay, first of all, here's an example of a system working fine. I've made an assumption it's a brand new company, and therefore the only thing that's happened is credit sales. One of the important things to note, this system is for credit sales and not cash sales. Okay, the reason why it's not for cash sales is cash sales never get recorded in the sales ledger because they don't affect the accounts involving the customer. We just credit sales and debit cash or bank. So this system is working fine. It'd be split down, and normally in a big company, different people will be working on the sales journal, the sales ledger, and the sales ledger control account. So one person has entered the 3 transactions into the sales journal, total 2,000. Somebody else has individually gone and recorded each entry as a debit in a customer account to increase the amount of asset a business is owed. Okay, they've done all that. They've balanced off the 2 accounts. Both customers owe 1,000, and then somebody else will come along. They're doing a check. This person has both not been making errors and not deliberately putting things incorrectly into customer accounts. And all the person needs to do here, because there's no receipts of money, there's no sales returns, there's no discounts. They just need to look at the sales journal. There's no balance brought forward because it's a new business. So the total of the sales go on the debit side of the sales ledger control account because it mirrors what happens in a customer account. And that tells us that the balance on the sales ledger control account is 2,000. And then my check is to compare this 2,000 with the totals of what is owed by each individual customer. And as we can see from over here, okay, when I add 1,000, 1,000, I get 2,000. That's the same as the sales ledger control account. So on the face of it, I think that everything is okay with these accounts. There are some reasons why it might not be, but I would assume now that the sales ledger accounts are accurate. Why do we do control accounts? One is it checks that the sums have been done correctly in the customer accounts, and we'll have a look at an example in a moment of where the sums aren't done quickly, and it highlights that. It may reveal which ledger contains the errors revealed by the trial balance. So if the trial balance was out by $100 and one of the 2 control accounts was out by $100, I at least know that it's going to be an account within that ledger, be it the purchases ledger or the sales ledger, which has the error. If it needs to at any time, it's a quick way for a business to find the total owed or owing by customers or suppliers, because it doesn't need to balance every single account and then add up the totals. It will help reveal and reduce the amount of fraud, and again I'll look at how that works in a moment. And it may reveal some errors not revealed by the trial balance, and again we'll look at that very briefly. There's still a problem with control accounts. There are some errors that may not be detected, and therefore we go on the assumption that the accounts are right, and actually they're not. It does not tell us which customer or supplier account contains an error, so it's fine saying that there's an error in the sales ledger, but if you've got 10,000 customers, you've still got to go through 10,000 accounts to do a check. And fraud can still be committed. For example, if the person who's working on the sales journal is deliberately putting the wrong information into the accounting system, that will mean that the balances are incorrect on the customer accounts and they're incorrect in the sales ledger control account. And therefore, although it appears as if the 2 numbers are the same, they are the same wrong number. How does arithmetical accuracy or arithmetical errors work? Well, we've got an example over here of where somebody has incorrectly totaled up Wokes' account and they've put in a balance CD of 750. So they've missed completely the 250 entry. And although the sales ledger control account's right, if you look here at the total for the sales ledger, okay, that only comes to 1,750. And it's different to the control account amount, and therefore we know that somewhere there's been an error committed. Okay, Indication of an error revealed by the trial balance. Here we're looking at again, it's the same set of numbers, but in this case we've missed completely one of the entries for Wokes, and because of that the trial balance will have a difference automatically on it of $750, and therefore when we've added up the two customer accounts, we know that we expect a balance on the sales ledger control account of 1,250, and yet when we conduct the sales ledger control account, it's got the right balance. It says it should be 2,000, and therefore I can put a little cross down here because that tells me that there's something wrong within the entries in these customer accounts. Okay, committing fraud, how might we find that? Well, here somebody is deliberately only put in a sale for Wokes of $75 rather than the full 750. It might have done it by accident, so it could also be an error, and that's one of the problems. You don't really know if it's an error or an accident. They might have just missed a zero off. But now when they've correctly balanced off the accounts, you've got a balance on Wokes still of 1,000, on Stokes of 1,000, and a balance on Wokes of 325 that he owes to the business. So the total that the sales ledger says is owed to the business is only 1,325, and yet the sales ledger control account, which is right, says the business is owed 2,000. Okay, an error not found by the trial balance, but found by a control account. Another example might be an error of principal. Error of principal is where we should have put this debit entry into the Wokes account because it was a credit sale, and somebody's going to put it in completely the wrong type of account, which in this case I've just randomly picked the cash account. So it's credited sales, and maybe somebody's not very experienced, and all they've done to date is credit sales, debit cash. They've gone and put that into the cash account. And this one will be revealed, although it won't be revealed by the trial balance, because the trial balance will just see the fact that there's been 3 debit entries made. We will have the individual account and the sales ledger saying the business is owed 1,250, and yet the sales ledger control account is right again, and that says that we are owed 2,000. So I'm quite happy. I can put a cross next to that, and I can say there's an error that affects the sales ledger from one of the accounts in there, and go back and look for it. Okay, but, and this is an important thing to remember and to understand, here we have an error that wouldn't be revealed by the trial balance, and it wouldn't be revealed by the control account. So in this case, there's an extra account that had already been created for a customer in the sales ledger, and the person doing the entries has correctly debited Stokes. With the first sale to Wokes, they've correctly debited them, but with the third sale to Wokes, the third sales to Wokes again, okay, they've actually gone and debited a customer called Vokes. So when we look at how much the sales ledger says is owed to the business, well, that says the business is owed 2,000, 1,250, 750. Sales ledger control account also says that the business is owed $2,000. So on the face of it, it looks okay. It looks like the information that we've got is right. But in reality, I've put a cross there because if we looked harder, then we would have found that this customer called Vokes never bought any goods, and therefore Wokes should really be the person that owes us that extra 750. Hope that helps. Goodbye.